Mishra and Arundhati Ramanan. Here are the key headlines from the startup space. Infinity FinCorp Solutions has onboarded Beam's fintech fund to its cap table as part of its $40 million extended Series A funding round. The NBFC plans to deploy the fresh proceeds to expand its MSME lending offerings. The firm had raised $35 million in a Series A round 3 months back, led by Jungle Ventures.
Health tech startup Stance Health has secured $1 million in its pre-seed funding round led by General Catalyst, with participation from Antler, Dave C and angel investors like Srihar Shamijeti. The proceeds will be used to grow its services in India, improve its tech platform and open more physical centers in Bengaluru and other cities.
More than 3 dozen tech startups with a combined valuation of $100 billion are set to go public by 2027, as per Bloomberg News. Flipkart, PhonePe and Oyo Hotels are among the companies seeking to list in India. Most companies preparing for an IPO have been able to strike a balance between speedy growth and profitability, according to a report by the Rainmaker Group.
Stockbroking startup Groww has secured approval from CCI to issue bonus shares to its existing investors ahead of its IPO. The proposed transaction includes the elimination of differential voting rights held by Groww's founders and the issuance of bonus compulsorily convertible preference shares to all existing equity shareholders.
And the frenzy to create Ghibli-style AI art using ChatGPT's image generation tool led to a record surge in users for OpenAI's chatbot. Average weekly active users breached the 150 million mark for the first time this year, according to data from market research firm SimilarWeb.
Those were the top headlines that we're tracking for you from the startup world. But on what's brewing today, venture debt in India is on the rise, with total funding reaching $1.2 billion in 2024, marking a 30% year-on-year growth. As equity funding slows down, dropping 45% last year, most startups, especially in the SaaS and fintech, are turning to debt to fuel their expansion plans. This, as per the Global Venture Debt Report launched by Stride Ventures in collaboration with Kearney. What are the key drivers behind this growth, and can we expect the momentum to continue in 2025? My colleague Aishwarya Anand finds out from Ishpreet Singh Gandhi, founder and managing partner at Stride Ventures. Take a look.
Venture debt overall, if you've seen the trends, what we were telling as well, it was less than 100 million in 2018, and now it's 1.25 billion. So this is almost 13x growth in like 6 years. Look, I think it naturally will grow, not to that percentage growth. Okay. So venture debt will grow as ecosystem keeps on reviving more. Because I think there was a time when venture capital and private equity ecosystem has been slightly subdued in the last 2 years, if you've been seeing that. So venture debt will start growing. Also, what will grow is growth debt, growth stage debt orientation. Because there are a lot of tech companies who are going towards listing. Okay, when that happens, another use cases emerge that you're doing a pre-IPO round. Can you substitute that pre-IPO round with debt? You are doing some asset-heavy businesses and the scale is becoming bigger. Can you substitute that with that? You're trying to acquire smaller companies. Why you have to dilute so much for acquiring smaller companies? So you substitute those. So the venture debt will just extend itself a little bit towards growth debt. And I think that's where the growth will happen more. Traditional venture debt will keep on growing. Maybe not be that percentage, but definitely should grow.
Okay. You mentioned the pre-IPO round, and the report does mention that Ola Electric and Bluestone, they used venture debt before, going for listing. Could you elaborate on that a little bit? Do we actually see that emerging as a very, very big trend now going forward, that, companies who want to go for a listing, they will start depending a lot on venture debt fund to strengthen their financial, to strengthen their balance sheet, to optimize their capital requirements? How will it work?
The companies you mentioned, again, they were doing pre-IPO rounds, or they were at this clear juncture of going IPO. So when you're very clear about the IPO side, you would want to dilute less because in public markets you'll get better returns. Correct. So for existing investors and founders, to create a structure which helps them prevent less dilution at pre-IPO rounds makes sense. and you have a defined use case, right? Pre-IPO round, you're trying to get the enough growth capital that till the time you're going IPO, you're well covered, even if you linger IPO, which has happened for some of the companies for a couple of quarters, and you're well capitalized for the expansion. So typically you have now in India a pre-IPO market, which was never there.
Which was never there,
At least a couple of years back, it was not as big as what it is today. So I think that use cases have emerged more.
In terms of sectors, what is making fintech, consumer tech, very lucrative for venture debt funding? And, in 2025, could we see more emerging sectors where venture debt could play a big role? Do you see that happen?
The reason fintech has emerged as an important sector because government has got a very good infrastructure, right? Individuals, we have Aadhaar-enabled credit now. Businesses, we have GST-enabled credit now. So the fintechs are emerging on the top of the government infrastructure. That's why the sector has progressed well, and the use cases within the sector has progressed well. And if you see consumer, it's a similar case, right? Government is concentrating on healthcare infrastructure.
Yeah.
Right? There is naturally a talk about AI.
Correct.
People are saying, how can we become a tech-oriented infra if other countries can do it? So these are the two sectors, healthcare and an extension of tech. I don't want to call it AI because AI is the buzzword, naturally everybody's aware. But at least innovation coming in an infrastructure manner which will present more companies and hence present use cases.
Now, talking about Stride, you've made $500 million across 100 plus companies in the last year. Committed $1 billion, right? So this year, how many investments are you looking to make? What are consumer tech, I think clean tech and deep tech have been one of your key focus areas. So beyond that, what are the sectors that you're looking at?
So clean tech has been an important stay for us for the last 2-3 years. And that sector has kept on propelling well alongside consumer and fintech. We'll still think that these three areas will remain important. So 60 to 70% of our deployment has been these three sectors. We think that it will remain same in the next, at least in the coming year.
One final question. So US venture debt market was 5 times larger than India. So I want to understand what are some of the lessons that India could take from mature venture debt ecosystems and incorporate. And by when do you think we'll reach that scale?
The learnings is from the credit perspective will be to make sure that you do products which are non-traditional products. You do very founder first kind of products. They work very cohesively amongst each other, venture debt, venture credit. And one of the reasons for growth is very accepted. Founders have got, for them it's very generic and the first thing to use in their mind. It's very accepted of form, which has gained in India. So I think those learnings of ensuring that the first word of venture debt being equally taken in the breadth of venture capital comes in.
Well, moving on to what's brewing today, Bangalore-based agri-tech firm Cropin has announced its partnership with global retailer Walmart to enhance its US and South American sourcing operations. Now, through this tie-up, Cropin's AI platform is going to help them optimize fresh produce supply chain by improving yield forecasting, monitoring crop health, and predicting seasonal transactions with more accuracy. For more on the significance of this partnership and what it means for Cropin, joining me now is Krishna Kumar, who is the founder and CEO of the company. Krishna, thanks very much for your time here on CNBC TV18. Start by taking us through the details of this collaboration with Walmart and the technology you're going to be using to help and strengthen the supply chain and the kind of revenue boost this will bring for you.
I think it's a great deal for us, being an Indian company, build a technology for the technology which is becoming very relevant for the developed countries as well. One of the challenges we are seeing from our customer who are into CPG and retail segment is the vulnerability which we are seeing on the supply chain. The surety of supply is getting disrupted because of the climate change, and most of this CPG retail segment is getting impacted. They're not able to forecast the supply and demand, and that is causing either overstock or understock situation, which is again impacting their P&L. So we partnered with them. I think one of the problem we are trying to solve in this market is how do you predict the supplier risk if there is a commitment to supply X by a certain by week. Will the supply is going to come? Because you have to monitor, you have to predict the yield, whether the crop is moving faster or slower. Is it the right time to harvest? Right. So all those questions we are trying to answer for them at the scale, at the scale of the growers and suppliers, and also at the country scale, right? How much the whole country is going to produce and how the harvest is going to come, right? Or when is the right time to pick so that you have one extra day of shelf life, right?
Got that.
From the produce, yeah.
Well, Krishna, this of course is part of the strategic pilot program that Walmart was running, where it had selected 3 startups as part of its growth summit in India last year. So will the collaboration be for a limited period, or what is the sort of agreement that you have with Walmart?
Well, I think this is almost like a 18 months program we are running with them, ensuring that they have, they get to the certainty of supply using technology, AI, and data. And then, the idea is to scale with the other crops as well. So there were opportunities to work on other crops with them, but we wanted to contain this to 2 large crop supply chain, and so that they can benefit from that, and then grow alongside with that, right? So I think that this is a very crucial partnership. I don't think this is going to be one-off, but this is going to go more deep as we progress.
All right, so you hope to be able to build on this existing partnership for 2 markets. But speaking of partnerships, you've digitized about 30 million acres of farmland. You have 100 B2B customers, you say. With this in your hand, what sort of new partnerships are you looking to close in the coming year or so?
Yeah, I think if you look at, we compute around 10% of the global food production sites for our customers to provide the intelligence. And most of the solutions are deployed towards the customers who are in CPG and retail. And the customer base are growing in, we started with India, right? So India, APAC, Africa, then we went to Europe and the US and Latin America. So this has become a global platform. And I think we are going more deeper with the use cases. Solutions are helping them to predict take a grid or a supply chain, and you can actually ask questions on what is the future of the crop, or what is happening right now, and what has happened in the last 5 years from the climate and the field perspective, right? So it's a very, very deep product, which is also helping them to see, if I take one variety of the crop to a newer country, which are the grids which is going to give you a better yield potential? Can you find those sites? So I think these are very, very relevant use cases when you are trying to diversify your supply chain, enter into new market with the new varieties. How do you accelerate those processes, right? Using technology and AI and data. And these are the use cases are scaling up, right? So with the larger ticket size, and because it's solving a bigger problem. Yeah.
Very quickly, since you're expanding and talking about entering new geographies, what about funding? Your last round was in January of 2023. Are you in the market to raise another round, as we understand? Could you give us details on how much, how soon, with who you're in talks with, what valuation you're looking at?
So we are already in the process. We have roped in the investor banker. I think in a couple of weeks, we'll be in the market to raise the capital, and we'll see how it goes. So we are planning to raise around 20 million USD. And we'll discover the valuation as we go. We follow the process and we reach to those discussions. But that is very much in the sleeves, and probably in a month's time, we'll be having those discussions.
All right, you've given us a headline there. $20 million in a month is what you're looking to raise, and have already engaged bankers. Krishna, we'll hope to hear more from you as and when that processes. But thanks very much for your time today on CNBC TV18.
Thank you so much. Thank you.
All right, moving on. South Korean gaming giant Krafton, known for titles including PUBG Battlegrounds and Battlegrounds Mobile India, has acquired a controlling stake in Nautilus Mobile, a Pune-based game development studio renowned for its popular real cricket franchise. The 118 crore rupee transaction marks Krafton's first controlled deal in India. And to take us through the contours of the deal and more, joining me now is Sean Hugh-Nilsson, CEO of Krafton India. Sean, welcome to Startup Street. Now, this acquisition marks Krafton's first controlling stake in an Indian company. You were an existing investor. Tell us what made you bet big on Nautilus Mobile, and you can also walk through us the details of the deal. Will Nautilus remain an independent entity? What happens to the team? And, Jet Synthesis also remains as a significant minority investor. If you could confirm this.
Yes, thank you for having me here. We have worked together and built a trust and relationship with the Nautilus for the last 3 years since our first initial investment in the studio. And it gave us conviction that we can create something bigger and something greater if we can work more closely with the Nautilus team. We are now holding more than 75% of the company through this acquisition by paying 118 crore to Jet Synthesis, in addition to the earlier investment that I mentioned in 2022. Jet Synthesis still remains as a significant minority shareholder, and they will play strategic roles in some areas such as esports. And the studio will remain independent. Of course, we are willing to provide much bigger support after this acquisition.
Sure. And we'll just get into that. So you clarified 75% is what you own now in Nautilus. And, you know, Sean, with the IPL currently underway and Nautilus Mobile being famous for its real cricket franchise, how do you envision Krafton's global expertise and tech capabilities, you know, elevating the real cricket series in terms of innovation and global appeal? What are the big plans going forward? How do you plan to empower the brand?
Well, I think that is exactly the reason why we are acquiring controlling stake in the studio. And also that's why Nautilus team and Jet Synthesis are happy to have this acquisition working for all of us. Although Nautilus is a great game developer, especially in mobile cricket game field, but it has certain limitations, mainly due to the lack of scale. Krafton, we are number 2 in Korea and maybe around top 10 as a listed gaming company. We have around 20 plus internal studios and also large global publishing capacity. We will facilitate real cricket team to observe technological know-hows and utilize our global publishing capacity from Krafton's global teams.
Okay. So what is the kind of impact you see real cricket making globally? What is the kind of demand you're seeing? And also, how do you see this partnership strengthening the sports gaming sector, both in India and globally?
As we are aware, cricket's popularity as sports are getting stronger in India and also globally. I believe there are stronger demands for good quality cricket games. Although there are few good mobile cricket games, mainly from India in the market, but it's still relatively small compared to other sports games like football, basketball, and baseball. I believe through this partnership between Krafton and Nautilus, we can position cricket video games as one of the major sports games alongside football, basketball, and etc., etc.
Okay. You know, Sean, Krafton has already made substantial investments in India, particularly in esports and mobile gaming. And in alignment to Krafton's commitment to the Make in India initiative of supporting local game developers, driving innovation and creating jobs, will we see more acquisitions going forward?
Yes, certainly. I think India has much bigger potential as a game development powerhouse than what we are seeing right now. I think Krafton is deeply invested into this market, and also we are planning to build our own R&D capacity in addition to acquisitions like Nautilus.
Okay. One final question before I let you go. The gaming industry has experienced explosive growth in recent years. Sean, how do you foresee the gaming landscape evolving in India, especially within the mobile gaming sector? What trends are you most excited about?
I think first there are more abundant investments coming from global and also local investors, strategic and financial, which will strengthen game development ecosystem in the country. And also secondly, I can see more young folks are interested in game development as their career options. And also fundamentally, Indian gamers are now demanding more high quality content and also more willing to pay, especially if they can find the value in the game as quality entertainment.
Okay, Sean, on that note, I'll have to wrap up our conversation. But many thanks for joining us today on Startup Street, and wish you the very best for all your growth plans.
Thank you. Thank you, Shruti.
On that note, it is time for us to head into a short break. But coming up next, Groww Indigo secures $10 million from British international investment to transform India's farming landscape. The funding will boost climate resilience and create new income streams for millions of farmers. We put the firm's co-founder on the hot seat to find out more.
very nice. Relatively speaking, we're going to be very kind.
Welcome back. You're still with us on Startup Street. On the hot seat today, agri-tech startup Groww Indigo has raised $10 million from UK's British International Investment, fueling its mission to revolutionize farming across India. Now, the investment will help scale the company's transformative carbon farming programs aimed at improving climate resilience and boosting farmer incomes. Already covering over 2.5 million acres of farmland, Groww Indigo is also partnering with global brands to drive sustainable sourcing across industries. To discuss the firm's growth plans, joining me now is Usha Barwale-Zehar, the executive chairperson and co-founder of Groww Indigo. Usha, thank you so much for taking time out and being here with us on Startup Street. Before we start, if you could start by taking us through what Groww Indigo does and the kind of impact that you've created on India's agricultural sector, and how are you differentiating yourself from other agri-tech companies?
Groww Indigo is very much focused on sustainability in agriculture. And when I say sustainability in agriculture, we are trying to look at what it is that farmers do and what it is that we can improve to make it more resilient going forward. To that effect, we offer two main solutions. One is around biological inputs. Biological inputs can be used as part of the fertilizer regime, as part of crop protection, but they are more microbial in nature or nature-based solutions. And the second one is around a new stream for farmers in terms of a parallel source of income by way of carbon farming. Now, when I say carbon farming, the farmers actually have to adopt a new agricultural practice, which reduces their greenhouse gas footprint. And this then gets quantified, and the farmers are remunerated or paid for by sale of carbon credits. So this is what Groww Indigo is offering to the smallholder farmers across the country. We have been successful in reaching a significant number of farmers between our bio and carbon programs combined.
Right.
We have reach of more than 1 million farmers.
Absolutely. We'll discuss that further in detail. But if you could sort of share a little bit more about the type of corporations that, Groww Indigo works with and how these partnerships help support both the company's sustainability objectives as well as how it serves the farmers, right? How are you driving profitability for smallholder farmers?
So when the farmers are actually undertaking or participating in our carbon program, by way of changing their practice, they improve their productivity because the soil health improves, the water retention improves, and this leads to better productivity for the farmer. Now, when I say better productivity, it increases yields for the farmer, and so, of course, the market value that they get. But in addition to that, with carbon as an additional crop, so the farmer is no longer growing just one crop of rice, but they are also in parallel growing a crop of carbon. It increases their income by anywhere from 5 to 10% just by participating in the carbon program.
Right. And, you've raised this $10 million from BII, right? How do you plan to leverage it to expand your operations and scale your carbon farming programs across India?
We are super excited to be partnering with British International Investment. This funding is really very much needed for expansion of our program. We started with our program in Punjab and Haryana, and we are also currently present in Maharashtra and Gujarat, but on a smaller scale. So with this funding, we see tremendous opportunity for increasing our reach, not only in Maharashtra, Gujarat, but also in MP, UP, Bihar, Chhattisgarh, and also Andhra and Telangana. With the funding, we will also be able to strengthen our data management systems, the science-backed verification, quantification that we do. So the funding is very timely and allows us to scale at a rapid pace.
Right. And what are the expected revenue streams for Groww Indigo in the coming years, especially, with the upcoming issuance of carbon credits and the sale of sustainable agricultural produce to corporations? Can you take us through your revenue targets for the year and what you're clocking already?
So from a carbon farming perspective, we have not actually generated revenues till date because we are awaiting the issuance of the first issuance of carbon credits. We expect this year that we will have almost 500,000 credits, which we will be able to sell on the market. That is the revenue that we anticipate from the 500,000 carbon credit sales. On the biological fronts, yes, we already have revenues and will continue to build that, but the carbon income will be the first time this year. So the issuance is something which is beyond our control to a certain extent, so I don't want to give you a revenue target number at this stage. But 500,000 credits is what we would look to be selling in the market at a price point of $30 per credit.
All right, fair enough. Now, with a presence across 16 states and 2.5 million acres enrolled, what specific regions or agricultural sectors do you plan to target for further expansion in the next few years?
So our primary focus had been on rice and wheat as a cropping system. Now in Maharashtra and Gujarat, we are looking at cotton and sugarcane. In some of the other states that we work, there will be other crops which will come in terms of from this funding perspective, corn, soybean would be the other crops which come in as well. The expansion of the geography would be a key driver for the use of this funding, and of course, strengthening our monitoring capabilities.
All right, Usha, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this journey going forward.
Thanks a lot for having me.
All right, with that, it's a wrap from Ritu, Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.